Hello and welcome to a new video on the HKCM Global channel. My name is Philip. Today I will be taking a look at the Dow Jones Index. It's always been my perception that the Dow Jones is very often in Europe not given the credit or given the amount of attention and interest as, for example, the Nasdaq or the S&P 500 is. But I think it's always worth looking at it. It's the big one. It's like the big steamship moving a little slower, a little less volatility than the others. But for us, with our analysis, it has been a very, very profitable market over the years, and in overall performance in terms of our target zones and resulting then in trades, it has been the most successful market over time. But people are not giving it the attention and the credit I think it really deserves here. So I think right now with everything closing in on new all-time highs, always the question, okay, is it over yet? Have we seen the high? Can the next all-time high be the big one? I think it's worth taking a look at where the Dow Jones is standing at the moment, and also take a look at our current positioning in the market here. So let's dive in. Let's take a look at the overall picture, the overall development. What are we expecting in the medium to long-term picture? Basically, it's the same assumption as in all the other indices as well. We are expecting a major high to be formed very soon. I've been talking about that for quite some time. The markets, as always, we are stretching things way more than as I assume it is healthy for the market and for the current situation, especially if we are taking a look at the underbelly, all the developments in terms of the economy, private households, the debt crisis in the United States, etc., etc. Things are actually looking quite grim compared to indices being at new all-time highs and or close to new all-time highs here. Overall assumption is that we are closing in on either completing all of wave one, which would be then a major cycle correction that we would be forced to endure then over the next couple of years, which would then basically send the market down by around 50% from where we are right now. Alternatively, the correction would still be quite significant, but we would not be going as low. But in both cases, we would definitely be seeing the 30s, the 30,000 point levels, and in the primary scenario, in the long term, we would also be seeing prices or point levels below 30,000 points for the Dow Jones. So currently, since June of 22, of course, we have been strong long here in the Dow. October 22, we have been overall strong long. Then if we zoom in a little bit, the last big buying opportunity was back in April, where we also called the correction here. So we've been in a long trade, engaged in a long trade ever since. We have not shorted the Dow Jones in between, taking it up to the current levels. We are currently around 20% still in the profits with our long positions from back in April. So what's going to be happening next? Short-term picture. We were assuming a corrective move. We have a slightly different count on the Dow Jones than we have on the S&P 500 and on the Nasdaq and the Russell, of course, which is another story. So we just entered a long trade here in the last few days, which is fine. We have stops have been set to break even. Currently, 3.5% in the green, so we'll just see where this takes us. Next step would be required to take out 48,519 points in order to generate more uplift, and also, of course, to generate then basically new all-time highs, and then close in on those targets here in the near future. So we will see how this goes, because on the other side, things are not looking too great. Taking a look at the indicators, we have crossed down on the 4-day on the MACD. We are starting to, we have been losing momentum basically ever since July on the 4-day, and the 4-day is a very significant time frame, in my opinion, on the Dow Jones. I've been tracking that for many years and has been a very successful indication for topping formations. We've seen a similar situation situation here back in December of 24 when we also entered that phase, the 4-day cross down for the first time. The market started to fall, and we had another little uplift here into February, January, and then the downturn into April. So this would, at the moment, we could be playing a similar outcome here, similar structure. We have crossed down. Maybe we have now seen the first leg down, now a little recovery, maybe new all-time high is still possible, and then a final sell-off. This could be the way that we could be ending this very soon. Otherwise, there is still the possibility, zooming out here, going back to the overall chart. So we can be expecting 50,000 point mark to be seen before the correction hits the market finally. But the signs are coming in slowly but steady that we are nearing the top, or maybe have even already formed the top. Especially looking at something I've quite recently added to my analysis, which I have been in touch with over the years, but not really applied it that much. But I'm now really taking a deep dive on that subject, is cycle analysis. So taking a look here at the Dow Jones, at the overall cycles, we have topped out on the weekly major cycles back in May of 25 already. So ever since then, we have entered a cyclic downturn phase, and then we have seen on the daily cycles, we have topped out here ending October, which is very, very close to the actual all-time high, which was then formed on the 13th of November. But it's very, very close, and ever since we are in a downtrending phase on both the weekly time frames and also the daily time frame cycles. So possibly a nearing bottom would be around end of January, then a little uplift phase into March, and then another downturn phase into April of 26, which would then be still coinciding with an overall downturn phase on the weekly cycles, which do not at the moment show a major bottom before February of 27. So this could all lead to an extensive correction, and this is also what we are seeing in terms of the Elliott Wave analysis and the Elliott Wave structure of the chart, that we are definitely closing in on completion on either a major cycle top within wave 3 or a major cycle top within wave 1 even, which would then of course lead to an even bigger correction over time. But taking all those little puzzle pieces into consideration and looking at each of the individual parts, everything is, there is still room. And of course, at the moment we are in a very, very overhyped phase. Everybody is being bullish. There's no other case, but everybody seems to be neglecting all the other side effects. And it's always the same case. Highs, crashes do not result out of situations of despair, or when people are already, okay, it's not looking good. It's always when people have a very, very positive, uber bullish outlook, which in my perspective is currently, what is happening in the market, especially also comparing it to other market cycle tops that I've been witnessing over the last 15 years, 20 years since I've been doing this. We had a similar situation going in 2018, 2019, 2020, very similar market phase here. So this is, in my view, very comparable to that phase, and basically we are now at the same point where we were at in ending of 2019, then going forward into 2020, and everybody knows what happened back then. So a very similar situation, and also the situation that we were seeing in 21, 22, when basically the next big correction already hit the market back then. We can take a look at that here on the overall chart as well. So what I'm talking about here is basically the correction that started in beginning of December of 22, and then went down to October of 2022. So this phase was also a very, very, very similar situation here. We had all-time highs around November, October, and then we saw a little. We were basically, so this is where we are right now. Then we had a little downturn. Things got up again. We made a slight new all-time high in January, and then we got down here. And then before the big uplift then started, it took over a year to complete the correction, basically. So this is something very similar I'm eyeing at the moment, and it would also be very, very well fit with these cycles and with also the development on the indicator charts that I've just shown. So let's see where it leads us. So currently for the Dow, we've taken up some more long positions here. yeah, we are safe at the moment, so there's nothing to be worried about here. And now we'll just see where it takes us. Are we able to take out those 48,519 points? If yes, upside will continue probably. And then in the next phase, of course, we will be looking at points where to short the market, take profits off our long positions, and then be positioned for a longer term downtrend, which is, for me, it's just not the question if it is happening, it is now just a question how much longer will we have to wait for it to occur. But we are closing in, and I'm expecting us at the moment, if we are percentage-wise, at the moment I'm expecting us to be around at 95% of the whole move to the upside. So there is not much wiggle room left here, in my opinion, and every high that we are forming now could be the last one for quite some time then. So, as always, thanks for listening, and if you haven't done so, subscribe to the channel, leave a like, leave a comment, and most importantly, make use of our Black Week offerings this week. If you haven't done so already, I think now is the time to get yourself a paid subscription on our website. And I hope you enjoyed the content as always, and see you next week.